is related to accounting for taxation. The ask of is this question is what charge or credit for deferred taxation should be recorded in the statement of profit or loss for the year ended 31st August 2022 or 2012, whatever you want to call it. Uh, so the ask is to tell credit for deferred taxation. Okay, let me increase the font size a little bit. Okay, so credit for deferred taxation charged to profit and loss. Okay, this is the ask. Let's gather the further information from this question. Uh, Astral company purchased an item of plant for 40,000. So they have a plant on the beginning of the year. Its value is 40,000. The plant has an estimated useful life of 5 years. Okay, useful life 5 years. 5 years. Then has a residual value. We take it here. Residual value of 5,000. Okay. The plant is depreciated on a straight line basis. So on SLM, we will depreciate it. But the tax law does not allow depreciation as an expense, but a tax allowance of 60% of the cost of the asset can be claimed in the year of purchase. So first year, so on the book, so we need to calculate the book depreciation and we need to calculate the tax depreciation. Okay. So for book depreciation, it is saying a straight line basis. Okay. It is a straight line method or straight line basis. So what we will do, we will take the plant's cost, we will deduct this residual value, and then we will divide it by the number of years, which is 5. So 7,000 of depreciation will be charged every year on the book. But tax depreciation is saying that in the first year you can take 60% of depreciation. I mean 60% of the plant value. So 40,000 multiplied by 60%. First year depreciation on the tax side, tax depreciation will be 24,000. And then the asset can be claimed, and the remaining depreciation can be claimed 20% per annum on a reducing balance basis in the following year. Then every year 20% will be allowed on the tax. So we are just doing this analysis for the first year. So we will ignore that aspect. And then rate of income tax. So income tax rate is also given. It is 30%. It is saying about the deferred. So means how much taxes we are deferring or we will pay in future or we will get the benefit in the future. So on the books we have 7,000 only. So and then tax depreciation is 24,000. So currently we are getting a benefit of, so we can say deferred tax benefit, maybe deferred tax liability or deferred tax benefit that um, we are getting is that um, we are getting a benefit of 24 minus 7, 17,000 of benefit we are getting, for which in future we will have to pay more taxes. So our credit here will be this 17,000 multiplied by this 30,000. So our answer will be 5,100. Okay, if you want to go through again, go through it again. uh, Everything till here is provided information. All of this is coming from this question only. Only two lines of calculation we just did. We calculated, or here I mean the book depreciation, we did a little bit of calculation here that, you know, uh, cost of the plant minus residual value divided by the number of years is our book depreciation. Tax depreciation is allowing 60% in the first year. So we took this 60% of the cost, and then we are seeing that okay, 17,000 uh, of benefit we are getting as of now, that we have to pay less taxes, like our expense is more on the tax side, but in future we will pay the tax more as it reverses in the future. So we'll have deferred tax liability of 5,100, which will be a credit to the PNL. So our answer will be option 2.